Imagine a world where governments no longer rely solely on oil, taxes, or exports to build national wealth. Instead, they entrust billions, even trillions of dollars to artificial intelligence systems that never sleep, never forget, and continuously optimize global capital flows in real time. That world is not a projection of the future. It is our present. And it's being driven by a silent revolution known as Sovereign Wealth 2.0. In this video, we explore how leading nations, including Saudi Arabia, China, Norway, Singapore, and the UAE, are using AI to transform sovereign wealth funds, SWFs, into geopolitical power tools. These funds, managing over $12.6 trillion globally, according to the Sovereign Wealth Fund Institute, SWFI 2024, are evolving from passive investors to active, AI-powered strategists influencing technology, infrastructure, and even global diplomacy. What are sovereign wealth funds? Sovereign wealth funds are state-owned investment entities created to manage national reserves, often derived from oil, gas, trade surpluses, or budget surpluses. Their mandate? Preserve and grow national wealth across generations. The largest include Norway Government Pension Fund Global, $1.46 trillion as of Q1 2025, China Investment Corporation, CIC, $1.35 trillion, Abu Dhabi Investment Authority, ADIA, $993 billion, Saudi Arabia Public Investment Fund, PIF, $920 billion, targeting $2 trillion by 2030, Singapore's GIC and Temasek, combined over $1.1 trillion. These funds invest in everything from US real estate to African startups, energy infrastructure, tech unicorns, and IPOs. The rise of artificial intelligence in SWFSAI isn't just a tool anymore. It's the architect of modern sovereign capital strategy. The fusion of AI and sovereign wealth is built on three technological pillars: machine learning algorithms for predictive analytics, sentiment analysis, and automated rebalancing; natural language processing, NLP, for scanning unstructured data, central bank statements, corporate earnings, and political news; computer vision and geospatial AI, used by funds like GIC to track infrastructure projects via satellite or drone imagery. According to McKinsey & Company, 2024, integrating AI into national funds could yield an additional $4 to $7 trillion in returns globally by 2030 through smarter allocation and risk mitigation. Case Study 1, Saudi Arabia, PIF and the Vision 2030 Machine. Saudi Arabia's Public Investment Fund, PIF, is the AI crown jewel of the Middle East. It is central to the Vision 2030 plan, an ambitious roadmap to diversify the kingdom's economy away from oil dependency. PIF uses Palantir AI platforms for real-time data analytics across projects like NEOM. It has established SDIA, Saudi Data and AI Authority, to develop national AI strategy. AI helps PIF predict ROI on futuristic investments including flying taxis, robotic cities, and green hydrogen. In 2024, PIF launched a $50 billion AI-focused tech fund in partnership with global VCs. According to a World Bank analysis, Saudi Arabia is the fastest-growing national investor in AI-linked projects globally. Case Study 2. China, Finance, AI, and Geopolitics. The China Investment Corporation, CIC, is the strategic financial arm of Beijing's global influence. CIC has created its own AI sovereign strategy lab, using language models to scan regulatory changes worldwide. It's investing in semiconductors, quantum AI firms, and infrastructure projects across Asia, Africa, and Latin America via the Belt and Road Initiative. In 2023, CIC committed $250 billion to AI-aligned sectors, per Bloomberg. The fund also employs AI to simulate geopolitical scenarios that affect its holdings in the US and EU. CIC's AI strategy directly aligns with China's broader policy of technological self-sufficiency and digital yuan adoption. Case Study 3. Norway. Ethical AI investing at scale. The Norwegian government pension fund Global is the most transparent sovereign fund and also among the most ethically governed. It uses AI for ESG, environmental social governance screening across 9,228 companies. In 2025, it developed its own ethics AI engine, which flags controversies in real time using NLP and global media feeds. It publicly excludes firms based on AI-assessed risk ratings on labor violations, environmental damage, and corruption. It has partnered with MIT for building AI systems that quantify carbon footprint exposure across portfolios. Case Study 4. Singapore. GIC, Temasek, and the AI Quantum Leap. Singapore is perhaps the most tech-integrated nation in SWF management. Temasek operates its own AI startup incubator, Vertex Holdings, which has seeded over 60 AI ventures. GIC uses AI for dynamic asset allocation and has invested heavily in AI-enhanced cybersecurity, fintech, and biotech. Singapore launched the Digital Sovereign Wealth Initiative in 2023 to transition 70% of its fund operations to AI-driven platforms by 2026. It's also investing in quantum AI hybrid systems in partnership with IBM and NUS. Case Study 5. UAE. Data-driven dominance. Abu Dhabi Investment Authority, ADIA, is quietly emerging as one of the most tech-agile SWFs. ADIA's internal AI team has developed Falcon AI Suite, a real-time macro-monitoring dashboard. It has partnered with OpenAI and BlackRock Aladdin to run simulations on global fixed-income trends. Over 65% of its asset managers now use AI to augment decision-making. UAE also plans to launch a regional sovereign AI blockchain aimed at creating secure digital ledgers of asset flow across Gulf funds. Global overview: who's next? Countries like Qatar, Kazakhstan, Nigeria, Brazil, and Vietnam are also joining the trend. Kazakhstan's Samruk Kazina Fund signed an AI partnership with Huawei Cloud. Nigeria's sovereign fund is launching an AI agriculture platform. Brazil's BNDES is building AI models to guide climate-smart infrastructure financing. Risks, controversies, and the ethics of sovereign. This AI-powered transformation is not without danger. Algorithmic bias. Poor data training could lead to discriminatory or politically risky allocations. Geopolitical weaponization. AI-powered state capital could become a tool for economic coercion. Market distortion. Funds with superior AI could manipulate markets, outpace central banks, and amplify volatility. The IMF and BIS, Bank for International Settlements, have called for a global AI transparency standard for sovereign funds. A Geneva summit is scheduled for early 2026 to propose regulatory frameworks. What this means for investors and entrepreneurs. If you're an investor, watch where sovereign AI capital flows. That's where alpha lives. If you're an entrepreneur, the next unicorns may be funded by sovereign algorithms. If you're a policymaker, the battleground is no longer just territory or oil. It's datasets, chips, and sovereign AI models. Conclusion. Sovereign Wealth 2.0 is the AI-powered fusion of state, capital, and machine intelligence. It is shifting power from Wall Street to nation-states, from hedge fund managers to neural networks, from quarterly returns to strategic dominance. To understand the future of money, you must understand the rise of AI-powered national capital. Subscribe to AIFinanceMastermind to stay ahead of the most powerful force shaping the global economy. Disclaimer: this video is for educational and informational purposes only. It does not constitute financial, investment, or legal advice. Always do your own research.